also end of the year, there's a lot of moves that can be made, things to get people ready, not just for the coming year or the previous year in taxes, but also planning just the retirement, the next 20, 30 years. And one of the things that we talk about very often here on the show is the need to have that emotional detachment, which is easier said than done. A lot of listeners want to know, how do I stop investing emotionally? I mean, there's so many opinions about the economy and the stock market. For example, on the same day I saw all of these, a so-called expert saying the market's going to go down another 20%. Another one said a 40% drop. Another one said, for what's coming, we're going to need a prayer. So not really that optimistic. But then there's market strategist Brian Belsky, and he told Fox Business that everyone should calm down because, well, he thinks we're almost out of the woods.
Do not talk about 2008. This is not 2008. This is nowhere near 2008. We think this is a garden variety type of correction that is, to some degrees, unprecedented with respect to what we're coming out of. But I do believe 2022 is the reset, and 2023, 2024 is going to be more of this return to normalization.
So it's covering the bases there, I think, talking about the sky's falling, or it's really not going to be that bad, or we're almost out of it. Guys, what are your thoughts on this?
I think that's a great question. In fact, for those of you that are listening, you'll remember we just recently had our economic summit that was held over at the Hilton Garden Inns in Perrysburg, and that's the common question that people came out to ask. And, with over 100 people that came out to that event, it's one of our most popular events. So for those of you that are watching or listening to the show and you haven't weren't able to come out to that event, we do have it up on our YouTube channel. So just, again, go over to YouTube, type in America's Retirement Headquarters. We've got some great commentary from our friends over at First Trust Portfolios from Chicago, giving you some market outlook. We're talking about, the biggest threats and opportunities right now in the marketplace. But if I summarized it all down, what I would say, Chris, is that the market doesn't really care what our opinion is. I would agree with what you talked about. It's very common that I'll get up in the morning, I'll take a look at the futures market to kind of get an idea that says how the market's going to go. If I read an article, it could be today's the greatest day to invest. And, by the time I get done with lunch and come back, it's the worst day ever to be invested into the market. So short term, what investors need to realize is that, emotions can be costly. And I think it's important, wouldn't you guys agree, to understand that emotions are a normal part when it comes to investing?
Yeah, absolutely.
So when you're talking to people about emotions, one of the things that I would tell people to do is I would tell people to look at where you're at in the emotional roller coaster of investing. In fact, they've kind of put together a chart that explains this in depth on the emotional roller coaster chart. And I asked this of the audience that was with us last week. And the question that we asked last week is, where do you think the stock market's going to be in a year from now? Now, granted, that's an unscientific poll, right? I was just asking the 100 people that were in the audience. What was surprising is roughly about 70% of the people in the room were still optimistic about where the market was going to be in a year from now, feeling that the market was most likely going to be higher in a year from now. Now, some of you listening today, you might be in a situation where you're kind of in denial as far as what's happened in the market so far in 2022. Maybe you're a little anxious about what's happened, and maybe you're fearful. I don't know that a lot of people are in a panic situation yet, but that is one of the first steps, I think, is to realize where you're at in that emotional roller coaster ride and know where some of the most painful points are when it comes to investing. So as an example, if you're feeling like you're in a panic, that could be selling out one of the worst things to do. I don't know if you guys have any examples or if you can think about it, but if you think about the last time you made an emotional decision, what were the results or how did that work out?
Doesn't usually work out well.
Yeah, I try not to play that game, Nolan. I've learned a long time ago, emotions just don't seem to work. Everything I try to do, I try to have a plan. Obviously, life doesn't come at you that way, but I try not to get my emotions mixed. I have to take a step back, take a deep breath, and then try to take a more controlled viewpoint of whatever the situation is and go from there.
Yeah, I'd say,
once.
From, somebody who served in the military, Dan, I know in the military when I served, if I made a decision just based upon panic, it could result in a deadly situation happening.
Yes, absolutely.
And I think about, my kids growing up in the Boy Scouts of America, we taught them the motto of be prepared, whether that's emergency preparedness or the things that happen. And, making those emotional decisions can actually result in more problem. When you think about somebody drowning in a pool, as sad and scary as that situation is, do you know what the first rule is when somebody's drowning in a pool?
Is that throw, row, go?
I like it, so you remember some of those. But the number one thing is don't be victim number two. So again, by jumping in a panic situation can actually cause more harm than good. That same is true when it comes to making those financial decisions. At the same time, I would say sometimes your gut can be right, but more often than not, making just a simple emotional decision can be painful. When we're looking at the market, the next thing that I would encourage you to do is take a look at where we're at in when you're going to need the money. So if you don't need the money for 5 or 10 years versus somebody who needs the money right now, that can mean that more time you have on your side, the more likely you're going to be successful when it comes to investing. So for those of you that are young and contributing to your 401k, keep contributing to your 401k. Keep buying more and more shares while the market prices are low because you're accumulating more shares. The next thing is you want to develop a defined process for when you buy and when you sell. Dan, I think one of the things that the military taught us is discipline, right? We did get a lot of discipline. And Bill, I would say the same as life experiences teach you that you have to be disciplined in your approach. So when you're looking at how to be successful and stop making emotional decisions in the market, rerun and run the fire safety drill. So think about when the markets go down. If we think about the basics of investing, you buy low, sell high. As the markets are going down, knowing that over time the markets are likely to recover, you want to develop a process that's encouraging you to buy low. The same would be true as the markets recover, developing a process to help you sell high as the market gets higher. But guys, any other tips that you would say your experience or stories with clients on emotional investing?
I like what you had to say, Nolan. The only other thing you can do is maybe consult your crystal ball. I don't happen to have one, but if you don't have one, then like you said, you got to be disciplined. Just like you said, you have to be disciplined and take a good look at things. Take a step back, and then move forward with some steps that are calculated to help you get where you want to go.
And we try to make sure that we bucket investments when things are well. Make sure you have your short-term, your medium-range, long-term money. You want clients to understand which bucket is which so that they know in situations like this, if you've got to take money out of your investments, we need to have money that isn't tied to the market.
And have an emergency plan. One of the things we always talk about in our business is having funds set aside so that you can weather that storm for a period of time.
Prepare when things are good, and you don't have to panic when things are bad.
Yeah, if you're worried about the market today, in conclusion, if you look at this, we can bring it all together with our unique approach. It's called the Independent Income System. You can get more information, again, on our website, America's Retirement Headquarters, on how to avoid today's threats and capture the opportunities in today's marketplace. So all great questions and all great ways to help you avoid being an emotional investor.
It's human to have emotions, right? We are an emotional species, but when it comes to your retirement, having those decisions be made under duress, with emotion, as we pointed out a second ago, could be, pretty costly in the long run. The saying goes, hope for the best, plan for the worst. So many of the people that you talked about, Nolan, said that they think the markets are going to do well. They're going to be up next year. And yeah, that would be great. But what if it's not? What if you're planning on retiring in the next year or two? What is that going to do? What is that hope going to do for you? Not a great investment strategy. A better thing to have in place is an actual plan to help you with that discipline. America's Retirement Headquarters, the entire team, they can help you with that. To get started, give a call, 419-794-3030. It's 419-794-3030, or go online, americasretirementheadquarters.com.